You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades haven't been that great today because the Nifty has been, for most part of the trading session, below 19,600. Yes, we have managed to perk up a bit, but nonetheless, there is that inherent weakness which is quite visible across the markets. But it's the mid-cap and the broader markets which are faring a lot better. So if you look at the mid-cap index, it's managed to hit a fresh record high yet again, and that compares with the frontline index, which is reeling under pressure, and so has been the banking space. Most of that space is actually trading in the red. What's doing all right today is realty sector. That's tracking to be the best sectoral gainer, at least so far this week. You have names like Prestige today, which are doing quite well, 8% higher on that one. Mahindra Life is a result reaction, and then India Bull Real Estate too is doing well. So the entire real estate sector is doing all right. The other space I'm watching out for is, of course, the power sector. So ahead of the earnings of Power Grid as well as NTPC, both of those stocks are fairly excited. In fact, they are part of the top 2 or top 3 in terms of the gainers on the Nifty. And then, of course, from the broader markets, names like Tata Power, Torrent Power is something that we are watching out for. But IOC, Aisha, the first set of numbers doesn't look like impressing the street because there are beat versus expectation, but maybe a bit of profit booking.
Yeah, and you're seeing a good 4% slash down as well in the stock, so it's pretty much justified how the street is absorbing those numbers, as are a couple of them actually. So a good set coming in from Ajanta Pharma. Novama now says that the company may actually be able to grow at a 12% CAGR, and that's something that they're liking. Ajanta Pharma has been strong one from the word go. Intellect Design, we should be chatting with the management as well shortly. The Q1 revenues have grown 19%, margins have come in excess of 24% on a year-on-year basis, and that's something that the street is liking. It's a big move on the stock, and it's managed to sustain its morning gains, 16% higher on Intellect. There's Greenlam Industries as well. The revenues have come in higher by about 10%, PAT up 32%. That stock is well going good by about almost 3.6% as we speak. Supreme Petro, though, hasn't been all that impressive. You've seen the Q1 revenues lower by 12%, PAT lower by about 57%, and this is a dip down on a sequential basis. So justifiably so, you're seeing that 2% crack come in on that stock. A lot of numbers actually coming in thick and fast. We've got Route Mobile as well coming in. The EBITDA has fallen about 35 basis points on a sequential basis. And, you know, given how much more Route Mobile would be sensitive in terms of a market reaction, we should just try and get more numbers in there, because it doesn't seem like, optically at least, it's a good set of numbers on a sequential basis. There's been that bit of decline for Route, and you can see the stock as well cracked by about 1.5%. But Anisha, before anything else, let's chat with the Intellect Design management.
Oh, well, yes, absolutely. That's clearly the stock of the day, shining bright in an otherwise weak market. So let's go across to Mr. Arun Jain, the Chairman and Managing Director at Intellect Design Arena. Arun, hi, thank you so much for making time and speaking with us, and congratulations on a good set. Just wanted to understand, was there any bunching up of billings or one-off or seasonality that impacted the numbers, because they look rather strong?
Yeah, they're naturally strong, and that's what we prepared the organization over the last few years. And these numbers are in line with our own internal plan processes. So we designed the organization for 20% growth year on year. We achieved 19%. So between 15 to 20%, we should be able to achieve our revenue growth. And our EBITDA growth is over 33%. And that's a very satisfying for all of us that our intellectual property, the IP product journey, the technology journey is moving in the right direction. So we are becoming a technology company from a product company, so that we have the best of the client across the world trusting our intellect technology. So it's quite a satisfying quarter for us.
Yeah, it sure is, and the market as well giving you a thumbs up on those earnings. But tell me, Arun, the margins as well have seen a significant jump. Is this going to be the normal run rate, northwards of 24%?
Yeah, that will be the ongoing rate. Our quarter-to-quarter number, I suggest the investor not look at quarter-to-quarter number. Our LTM numbers are more better, because there are some licenses number can bump up some point of time, but 24%, we designed the company around that time. The 24 to 26% numbers can be there, but LTMs are the better metrics for us to look at it.
On a 12-month basis, what you're saying is that 24 to 26 is a more realistic number. But talk to me about the overall deal wins as well, because this quarter the deal signings have been strong, Destiny deals have been good as well. But despite of that, what's the funnel looking like? Is there's a bit of a delay in decision making at all? Because your other peers have been complaining about that.
Yeah. So I think the three investments which you made in a company in AI, we have put a decision AI in the front. So a lot of noise is there about AI. Intellect is working on AI for the last 7 years. And we put information AI to decision AI. And that is helping us out in making the operational cost of banks coming down. And the entire technology what we are offering called eMAG.ai, event-based, microservices-based, cloud-based technology, which is make the system ultra simplified for the banking of $600 billion spent, is getting the attraction for us. So we got a deal from Philippines, one of the largest Philippine bank, selected us as a partner. We got a deal from largest Eastern European bank, OTP bank in Hungary. We got a deal. We got a one deal from France, largest French bank selected Intellect technology, and one large US bank selected the technology. So I think these 4 deals from 4 different regions is making us having a good pipeline, because we are operating in 57 countries and 10 countries are where we are significantly investing money in. So these are the movement that our pipeline is moved to 7,000 crore, 7,200 crore, if I'm not wrong on the number. But it's not about that pipeline number which is important. It's the quality of this decision making of some Hungarian bank, US bank, French bank, and Philippine bank selecting our technology, that making us different.
Yes, and the Saudi bank as well added to that list, right? But just help me understand, Arun, how does the entire revenue, revenue execution track for this eMAG.ai product? What's the timeline of this, coming into the revenues? How does the order execution actually play out? And which other banks are you in conversation with for the adoption of this eMAG.ai?
It's a very, very interesting. We launched eMAG.ai sometime in February along with AWS, and cloud is the traction and AI is the traction. In last 5 months, we have close to 15 workshops with various banks, and we have still more than 20 more workshops to go before September 30th. So at this point in time, this is the excitement of sharing eMAG.ai with the bank. Cycle time of decision making in bank can be as large as 18 months to 24 months. But whatever the deal we are closing is getting accelerated because of eMAG.ai. So the decision cycle time, which could have been 24 months, is getting shrink down to 12 months to 18 months cycle time. So that's the current state of affairs.
Arun, you just earlier alluded to the fact that you're no more a product company, but you're a technology company. Tell me, how different are you from a traditional IT company, which is largely a pure services play? Because traditional BFSI seems to be moderating for the entire industry, but for you, fintech exposure is actually giving you a boost.
Yeah, I think very good question from the perspective. First is services company. So services company leverage the power of the human resources to be given to the client, and they work on the client orders, which is a service industry. They design a solution or build a solution for a specific problem solving. For a product company, we built the product in anticipation. We invested 16 million hours of the R&D efforts, which is in US term is equivalent to $1.2 billion, $80 per hour cost. That investment gives us a ability to suggest this is the way bank can make 30% operational cost reduction or 15% improvement in the revenue. Now this story is very different from the service story. And then technology stories we are calling, why we are calling technology, we have 2 technologies for no-code platforming and decision AI. These 2 technologies are differentiating us compared to Thought Machine, Temenos, FlexCube, Finacle. These 2 technologies are making significantly differentiated, and that's why I'm calling ourselves is moving from product company to technology company. The eMAG.ai is a technology on which we can deliver core banking, we can deliver lending, we can deliver wealth management, we can deliver cash management, we can deliver liquidity, treasury, central banking, all are composable solution after that. So that's a difference where technology becomes the heart and products becomes the composability.
Okay, so the idea is to transition to a platform or let's say technology company and products become something as part of the entire boutique. Arun, thank you so much for making time and speaking with us. Positive commentary, 15 to 20% revenue growth is what they're targeting and margins expected to stay around 24-26% with a good amount of traction seen for that eMAC.ai product. But from one management to another, we have with us the management of Shyam Metallics and Energy joining us, Mr. B. Bhushan Agrawal, the Vice Chairman and MD joining us on the show. Mr. Agrawal, hi, thank you so much for making time and speaking with ET now. Well, the numbers this time were a bit muted, whether you look at on a year-on-year basis or even sequential basis, and you can attribute it partly to the macro concerns. But the question is, as we look forward to the next 9 months, can you say definitely that the worst is behind?
I feel, like the steel prices have already bottomed out and we are seeing the revival in the price side. In China also, if you can see, there is a revival in the steel prices. But since this is a second quarter is always little bit, on the monsoon side, there is always a pressure. But, we can see simultaneously the raw material prices are also, correction is happening in the raw material price as well. So I see in the down the line, the margin should improve because of the correction in the iron ore prices as well as in the coal prices. And where the demand is concerned, we should not be very much worried because India is a very growing economy and a lot of activity and action is happening in our country. And I see, where the volume in respect to the demand is concerned, we should be able to meet out.
Okay, so that's the point as far as the outlook is concerned on the macros. But what about margins? Because I wanted to scratch that point further with you. Despite the volatility, the margins have managed to remain largely stable. And that's partly because of the fact that you're an integrated player. What's the visibility and outlook when it comes to the operational performance and margins?
The inventory is not very majorly, I would say at this point of time because yes, but there are some carryover of the old inventory of the last quarter. But we had been very slow in taking the positioning, seeing the correction in the market. And in the same quarter, I see, we should be able to refrain with the margins, what we are enjoying. And also I see, because there is a lot of correction happening in the iron market, in the iron ore prices and the coal prices, which is falling drastically, I feel margin should not be a challenge.
You've also approved a fundraise to the tune of about 3,600 crore rupees and a capex plan of 4,000 crores. How much will capacity increase by and when?
See, we have already announced the new capex of around, close to 3,900 crores. And we are adding more capacity in the specialty alloy, adding more on the power gen side, and different product mix. So we have, I see in the time to come, we see a CAGR of around, close to 15 to 20% year-on-year basis. And simultaneously, we'll see the bottom line as well as the top line seeing changes on the improvement side.
Right. Mr. Agrawal, we understand that the promoter group also needs to reduce its shareholding from the current 88.35%. But when do you expect the stake sale to happen and any timeline that you can share with us?
Yes, there is an interest already because the company has been performing very well. And, post-IPO, if you see there is a growth, whatever we had committed, we have delivered. And today, whatever capex of close to on the IPO side, whatever capex have been committed, we have already anchored more than 80% capitalization. I'm sure the investors must be happy, and yes, they are showing a lot of interest in further investing, and we are also seeing the interest of the new investors as well. Yeah.
Mr. Agrawal, we'll let you go on that note. Appreciate you joining us on the show. But from one metal major to another, the commentary coming in from Vedanta Chair Anil Agarwal on the sidelines of the semiconductor event, which is going on right now in Gujarat. We'll listen into that small interaction and take a small break.
There is nothing broke. What is their strength? With their strength, they will be continuing. We'll be talking to them, working together, and for the foundry, for chip making, for the packaging, we both were looking a partner. Something Foxconn also have a capacity, so we'll work fresh, looking at everything, and there's a lot of interest in India, people to come in, and a lot of credibility of the Vedanta. So we are going step by step. How do we make sure that we produce semiconductor as early as possible?
Closing trades right here, Nifty. Now let's see what the closing trades are settling in at. We've got 19,700 just about defending that mark on the Nifty futures, 730 actually, and 19,625 on the Nifty. Kunal, I don't know if there's such a are you ready, Kunal?
Yeah.
Sorry. But I don't know why such a gap on what the futures are indicating and what the spot rates are. I don't know if it's my terminal issue, is it not updating? But Nifty futures on day one of the series at 19,730?
Yeah, futures
Okay.
at 730. So the premium is 120 points, 110
yeah.
points for the index, which was 140 points yesterday closing. So again, I think it's a good parity of 20-30 points, which has come down for the futures for the current series, for the start of the fresh series. But again, I would probably believe that this is more of an adjustment which has happened, to the index, especially to the Nifty, because I've seen historically that such kind of huge premiums to begin with, they generally get paired on the first couple of days of start of a fresh expiry, and then the normal course of trend begins for the index. We still are trading about the key support points which we flagged off yesterday, that for example 90,500 on the Nifty spot, as well as 45,000, 45,200 for the Bank Nifty. So we are still trading about those two support levels, and I think till the time we trade about these two support points for the individual indices, there could be odd corrections, but then the tendency for the markets to absorb those corrections will also be pretty much high, like what we are seeing today. So no regrets as such on the intraday volatility till the time we're trading about those key supports.
Sure. Naresh, is 19,700 looking like a more promising base, or 600 where the Nifty spot is?
So like I've been saying for the last few sessions, 19,500, 600 is a zone where you want to buy, keep a stop loss of 100 points. And that is the spot prices, which is where we earlier made a top. So the previous tops start acting like supports in a bull market. So in this case, 19,500, 600 should act as a support. And what is interesting is the fact that even though the indices have been under pressure, we are not seeing a similar pressure in the mid cap and the small cap, as well as in the advanced declines. Even now the advances are higher than the declines, even on a day when we were down almost 100 points during the day, and now we are still down. So the breadth is positive. The index is seeing corrections thanks to a few heavyweights taking off. HDFC Bank continues to be a problem, which is almost 14-15% of the index. So overall, we are still in this consolidation phase, 19,500 to 20,000. Time to continue to look at stock specific.
Okay, that's the take coming in the market so far. And here's Ramdev Agrawal from Motilal Oswal Group. He also shared with us earlier today his outlook on the markets and the sectors that he's betting on.
Actually speaking, it is the toughest thing to find as a category, big mispriced. I would think that PSU as a stock, as a basket, was the one very large, concentrated, now profit making. In PSU, one of the biggest problem was the PSU banks. Now they were actually incurring losses as an aggregate, except for SBI. In fact, 1 year even SBI made loss. So there was a serious loss till 2 years back. 2021 till 21. Now this year, I think they will deliver record profit. I think it will be upwards of 150,000 crores or maybe 2 lakh crores.
SBI?
No. Total PSU as a basket.
SBI itself is 40,000 crore for the last year. Maybe it will be cross 50.
It will be 50-60,000 crores. So I think it will be upwards of closer to about 1.5 lakh crores for the PSU banks themselves. So that's the kind of transformation we are talking about. So that's one group, entire PSU baskets, whether it is oil companies, whether it is banks, whether it is there are a whole lot of consolidated, monopolistic. Defense also they have become the real blue chips. So, but that's where you find 10, 12 P multiple companies and large in sizes, and so. But otherwise, I don't see anywhere below 15 P multiple, and where you have a good chunk of earnings. those kind of stuff. It's not there.
So if I'm going to shift gears and talk about now Ramdev the investor and his view for next 3 to 5 years. One is financials, which you're bullish on. What else do you think will become, which is small or medium right now, could become large and big?
As an industry sector, you're saying?
Earnings. Where do you think the earning pools is likely to grow? I mean, what happens to market cap? What happens to macros? Nobody knows. You've tried to predict the earnings based on a model which is QGLP. So based on your model and understanding.
So that's what I'm saying. All the businesses, even the old businesses which are powered by internet, who are the businesses which are exploiting the power of, see, there are pure internet companies like say Zomato, Swiggy or Policy Bazaar. They are designed around internet. So they have a great chance to, if they execute well, they will become very large. Maybe not in 1 year, 2 years, but if you look at say next 5-7 years, I think they will become seriously large players in terms of profit pool also. That's my expectation. Nobody has delivered so far, so we have to see that. So that is one exotic, high growth, high probability event. It has not happened. So that is one frontier. Second is the say like Bajaj Finance kind of a company, which are traditional lenders, but using the power of technology. Say even the broking, where it has become all digital. Actually, the purest possible digital businesses in India are the broking companies.
Yes.
Whether it is Zerodha, whether it is Angel One.
Online,
in terms of execution, we have still got lot more. We are a lot more phygital, I would say. Phygital infrastructure is there. Our lot of value is not coming from execution; it is coming from advisory. So we are phygital. But Angel One, Zerodha, they are pure digital companies. So and they are growing rapidly. They become very large, seriously large. So you have to really start seeing where all accelerated growth we can find, because multiples are pretty high. You're talking about 20, 25 and all. So clearly market is building in significant amount of growth. So where is the growth differential you can see? And then so like among the traditional business, like real estate is very small compared to multiples are high, but if you talk about the total profit pool, practically nothing. Till last year they were like loss-making types or no profit. Now current year 22 they have shown some profits. So that is one area where I think you can see if you're a good promoter, sensible guy, they don't go out of after seeing the current terrible thing. I think 8-10 years they are good. I don't think they are going to get into they'll commit mistakes again. Maybe new kind of guys will commit mistake. But I think this is going to create a huge industry. Then one other thing which is happening is post-COVID is health insurance policy. And there is a huge growth in health insurance, and now insurance regulator is out to grow the industry very rapidly. They want in next 15-20 years that 100% coverage in the country. So that can happen only if there is a rapid growth in the industry. So that's happening. And that is leading to a lot of consequences. The hospital industry is growing. Now everybody wants to go to the good hospital. If you have the policy, then why should you go to nursing home or something? So there you are seeing a lot of boom, and that's why you see how many IPOs have happened in hospital sector.
Pharma is doing well, domestic pharma.
Yeah,
you will buy better medicines.
Yeah, so I think so you have to see in a growing economy of 6-7%, you need a good entrepreneur who can execute and grab the market share from whichever industry he is in. And there is industry tailwind. So like in financials, about 14 to 15% is the industry tailwind. And in that, can you grow at 1.5x or 2x? And then you are sorted. And other places, the growth might be a little slower. But today you see Nestle result. Nestle and
HUL also numbers were not great.
Numbers were not great. No?
Volumes were contracting.
But Nestle number is very good. And there is another one today, I think.
Tata Consumer was just about okay.
No, there was one more. There were 2-3 good results, like this Westlife was good.
But they're expanding there.
And there was one more consumer company result which was very good.
Colgate was decent.
Colgate is outstanding result. So I think you are going to see some of these consumer companies also, because to create these franchises are very tough, and they are monopolistic. And all the products and pharmacy, your consumer product, FMC, thanks to delivery mechanism and now social media and internet, all these products are finally reaching the tier 3, tier 4 and almost you can call villages. So the distribution is expanding big time, and the benefit of that you see in the years to come as the economy recovers from COVID shocks.
I've extended my appointment with you, so I'll limit it to one last question. Ramdev Agrawal followed a simple policy that he had taken a bet on big entrepreneurs. Narayan Murthy when you bought Infosys, Aditya Puri when you bought HDFC Bank, Deepak Bhai or Deepak Parekh when you bought into HDFC. A lot of people took a bet on Ramdev Agrawal as an entrepreneur and Motilal ji as an entrepreneur. So Motilal Oswal and a lot of other franchises have done well. What are you telling your new team now, the young team, your new CIOs, your young CIOs who've not seen that many market cycles? Whom should they bet on now? Who are the entrepreneurs? What are the businesses they should bet on? Because it's all about, perhaps assumption, calculation, margin of safety, but a leap of faith also at the end of the day. That you are betting on the promoter, he will deliver. I'm quoting you only. That a good business into a bad management is zero, and a bad management into a good business is also zero. So the management whom you bet on, entrepreneur you bet on is very important.
Yeah, so I think depth of research is there. We have experience. We have management access of very high quality. And good thing is that a lot of new entrepreneurs are coming. So you don't have to be.
Do you have any favorites?
No, I mean, like I'm stunned by some of the newer entrepreneurs when I see every day. I have even today I have the meetings. So when I see some of the new entrepreneurs, they are very exciting. I mean. Their execution capability is very good, very flawless, very transparent, compliant. Earlier in private equity, a lot of guys they used to come. They say, "Sir, because of tax reasons, we have not paid taxes. But जैसे हम private equity का पैसा आएगा, हम everything." I used to show them the gate. So nowadays you get very clean kind of management. One of the companies we have invested in Rajkot. I'm in Rajkot. Can you believe this? And from there, they are taking on in diaper company, they are taking on to all the, your PNGs of the world.
Really, diaper company in Rajkot?
Yeah, and the largest Indian diaper company. Okay. So, Pan Group is there. So, I believe they are doing 500-600 crores of only diaper. So those kind of opportunities are coming. Entrepreneurs are coming from nowhere, nondescript guys. And see, as I told in the beginning, now there is a fantastic availability of capital at every stage. If you have an idea, you have the capital and you have the lenders who are ready to lend. What more you want as an entrepreneur? You need an idea and courage to bet your life onto that venture.
One final question, and this is something which again I'm stealing from one of your wealth creation studies, value creation and mega trends. Everybody is excited about EV. Some are excited about energy transition. Everybody is excited about manufacturing, stroke defense, electronic manufacturing theme. One of the mega trends which you had bet on was two-wheelers. Another mega trend which you had bet on was consumption of private bank, PSU banks becoming public bank. Government telecom companies losing market share to private telecom companies. What is that next mega trend according to you? Maybe one, maybe two, maybe three. If you can
I told you, we talked about it, the digitization.
That's an obvious trend.
No, not very obvious.
Okay.
A lot of businesses will see the companies which can digitize themselves, those who can harness the power of technology, they will go forward so much. The existing stable big guys, they'll just keep watching. You gain market share in banking, which is like a giant 4 lakh crores kind of a profit pool. In that, from less than 1%, they'll go to 4-5% in a growing market. That is going to happen on the back of this digital power. So you have to keep watching. Business could be old, but who is the guy who is able to harness the technology?
But Ramdevji, just to wrap that final point, every decade will give us great companies. DMart, Indigo, Bajaj Finance. But those would be a handful. But ultimately, large part of the profit pool in India is still dominated by Reliance, HDFC Bank, to some extent TCS. These are the companies which are only becoming bigger and bigger.
Sure.
Do you see the puck moving now decisively in favor of large and unique companies? While every decade will give you your 10, 15, 1 dozen companies, but in general for investor, don't be tempted to go into mid cap, small cap, or multi-bagger mat dhundo. Large cap is where the right to win is.
Yeah, see, the top 10 companies, I keep doing wealth creation study.
Yes,
I see the table changing.
Okay.
Table will change. You'll be stunned how much the table has changed in 10 years' time. It's not the same 10 companies. So many companies have fallen off and so many companies have come in. And suddenly you see, that, in US, in top 10, it's all technology companies.
Yes.
All internet or technology. We don't have technology companies per se. We have technology services company. So they have dominated big time and they will do very well because they are able to adopt in every change, whether it is a Y2K, then whether it is it was ERP, then .com, then whatever, one by one. Now AI has come. They will be the biggest beneficiary of AI revolution. That's my belief. It is too early to call this, but my sense is those who are able to master that, they will just leapfrog. So I think the winners of the top big table, I mean, of course, Reliance and HDFC, they have reached to now 1, 2, 3. It is very difficult to dislodge them. TCS, I mean, now finally TCS has reached. HDFC Bank from 25 years back, it was a startup. Today,
Fourth largest in the world.
Yeah, so that's the journey of 25 years. So in next 25 years, you see a very different set of companies coming in who might be today ranked 150, 120, 200, and they will come, they'll keep gaining share and they'll come to top 5 or 10.
Well, a smart recovery is what is underway. We've actually managed to go into the green, all from that level of sub 19,600. So a very good recovery at play right now. Though we are now back around that flat zone, but at least from the lowest point of the trading session, it's not a bad recovery at all. But in terms of what's happening globally, the European markets are a bit choppy and the pre-market rates from US are actually all right. So the Nasdaq is again showing an uptick of around 0.6% after the kind of close that we got yesterday. So not much to complain as far as the global setup is concerned. But for our markets, a lot of cues have been coming in terms of earnings. So let's try and understand what the expectations are from Maruti this time around. Shrishti, tell us what the street is expecting.
So not a great set expected this time from Maruti Suzuki, because on a sequential basis we are expecting a moderation or rather a decline on a sequential basis. Firstly, let's talk about the revenue figure. That's expected to be almost a flattish growth we are expecting over there. 31,778 crores is the expectation, because do remember this time the volume saw a decline of 3.3% on a sequential basis, and that too the push was actually from the lower end models. There were high discounts in the same as well, and that actually aided the volume growth. There was some good booking from the newer models as well. So all of that supported the volume. But if we look at the EBITDA, that's expected to see a decline of 3.2%. 3,244 crores is the expectation. And even at the margin front, we're expecting a 30 basis points decline, and 10.2% is the expectation. But the key to watch will be the margin figure for Maruti Suzuki, because last time they retained that 10% above margin. So this time, whether they are going to retain that mark or not, that will be something that street will be watching closely, because the Q-on-Q decline will largely due to the lag impact of Japanese yen and India INR movement on the vendor imports, as well as there has been some initial signs of demand moderation. So that all could reflect into the numbers. And lastly, profit figure, we are expecting that number to be 2,444 crores, and that will be a fall of 7% on a quarter-on-quarter basis. So that's the expectation on the number front. But other than that, we'll definitely watch out for what is the management outlook on the demand going ahead, some of the booking numbers for their new launches. So all of that will be in focus as well. Right, okay. Let's also, that's of course Maruti, and we need to look out for that one. It's going to be an interesting commentary, more importantly, that we're going to be hearing from Maruti, given the kind of new launches that they've had in the first quarter. Let's also welcome on board Pawan Parak. He joins in from Renaissance Investment Managers to talk about what he's making of the market right now. Pawan, hi, good afternoon. Good to have you on the show. Just wanted to get in your sense on what the market internals are looking like right now. Does it seem like we're close to peaking out? What is it that the investors should be doing?
So I think markets are now factoring in a full-blown recovery, not only in India, but if you see globally also last 3 months, inflation has actually started gradually coming down. And while the inflation is coming down, most of the growth indicators continue to remain very decent. In that backdrop, market is actually now pricing in a full-blown recovery. And that is the reason, and typically these kind of markets, you would see mid-cap and small-cap stocks doing very well. And I think that is similar. That is exactly the kind of market we are into. In this kind of a backdrop, I would actually recommend investors to, to be very selective, right? But at the same time, participate in the market. I think there is no sense in staying away from the market. It makes a lot of sense to remain invested, but at the same time, it's very important to remain very selective, because there are few pockets in the markets which are showing signs of overvaluation. But at the same time, there are a lot of sectors and stocks which haven't seen growth over the last 10, 15 years, but are now seeing growth. And those stocks and sectors are available at reasonably good valuations. So it's time to be selective.
Let's probe a little bit more into that. What sectors are looking overvalued and undervalued to you?
So I think the entire staple base continues to remain overvalued. I think chemical sector, there are few pockets of overvaluation given the downturn in which the sector is. I think these are the two sectors where I see some sort of an overvaluation. In fact, I would go ahead and say that even some tech stocks, despite the correction, there are some pockets of overvaluation even there as well. These are broadly the key sectors where I see overvaluation. But if you see on the other hand, banking sector, industrials, they have been one of the leading sectors who actually rallied in the last 1 or 2 years. And there also I see, I think if you look at the top large banks, ICICI Bank, HDFC Bank, by no means, I don't think you can consider them to be overvalued. I think they are fairly valued. Similar is the case if industrials also take the case of large companies like Cummins or L&T. I think these are companies, considering the growth that they have in front of them, I think they're reasonably valued.
Point taken, but Naresh, what about the entire mid-cap zone? Because that's, outperforming massively today. Do you think that's getting into a bit of a stretched and overbought zone as well?
So yes, we are getting into overbought zone for the Nifty, the small cap index as well as the mid cap index. But the only way you can ride big trends is to continue to hold on to stocks till the time they continue to make higher tops and higher bottoms, or they start making the first indications. We've not seen reversal signals. The only case when we start looking at being a little more cautious is when the Nifty starts making lower tops and still the small cap and the mid cap indices continue. But as of now, we've not even broken 19,500 on the Nifty. Once we start doing that, that's the time you take some chips off the table. The only thing which one can do right now is play a lot more defensive, focus on low beta names. And that is where we are seeing the, the ball move. We are seeing NTPC hit a new all-time high. Oil and gas is doing well. So time to be more defensive and we continue to hold on to positions and be strict on the trailing stop losses going forward.
Just looking at the chart of ICICI Bank, if we can just bring out the intraday graph for you, because, like while Kunal was just mentioning that just last week, it did manage to clock that all-time high of 1,006 rupees per share, thereabouts. And it did scale that all-time pack of the 4-digit mark. Now, the 7-day chart, the intraday graph, if we can pick up, because there is a big spike coming in on ICICI Bank, holding upwards of almost 0.4% right now as we speak, and climbing up even faster than I speak right now, almost in a rush to hit that 1,000 mark once again. Kunal, intriguing move on ICICI Bank. What do you read here?
Yeah, I think it's been a bit of an impending move, I would say, for ICICI Bank. The stock had disappointed earlier in the June series, specifically when I remember, I think clearly Axis Bank was one of the better performers. IndusInd Bank had performed well. HDFC Bank had its fair share of gains. But I think in the July series, you've seen ICICI Bank actually taking the lead so far. And I think at the start of the August series, it could probably be a good sign that the stock is coming back to its strong uptrend, even though it's recovering from the intraday lows. But then the fact that the stock is hanging around the 1,000-odd mark, closer to those levels, I think is always a good sign. Because it indicates that the stock was trying to saturate as well as go into a maturity of a trend closer to a strong change of round digit. I would ideally believe that ICICI Bank should be good for 1,060 to 1,080 over the near term. So my view on private sector banking stocks have been to bet on very specific names, not the entire pack as such, because not all stocks are moving in a synchronized manner. ICICI Bank is one of the stock which is looking strong. 1,060 to 1,080 is what I would place a short-term target for.
ICICI Bank climbing up very smartly in trade right now. Power, of course, like Naresh was highlighting, is a big trend also right now in trade. In fact, Pawan, that's the other thing that I wanted to talk about, this entire sectoral churn which is actually taking place in the market. Anything from the energy power space that is looking interesting to you?
Yeah, I think utilities as space look pretty interesting because I think as a country, we've not invested much in renewables or much in power for the last 4 or 5 years, honestly. And while we've seen economic growth, considering the growth in manufacturing that we're going to see ahead, we need to invest in power now. So, and most importantly, typically in energy and energy related sectors, you'll find most of the companies from the PSU space there, be it utilities, be it financiers. They are largely from the PSU space, which was largely ignored by the markets for last 5-10 years. So considering, NTPCs of the like or RECs of the like, these companies are trading at very, very, very cheap valuations. So I think that sector looks pretty interesting.
Okay, so that's the view coming in on some of the power stocks. But the other space which is building on to gains today is, of course, the real estate pack. In fact, for the week, that's tracking a gain of 5%. If we can pull up the Nifty Realty Index for the week, it's higher by around 5%. Sobha is higher by 12%. Prestige, the bulk of the move has actually happened today. And then Godrej Properties and Lodha as well have managed to eke out gains of around 5 to 10%. Pawan, your view on the real estate pack and which is the top bet?
So I must tell you, our channel checks in top 5-10 cities, they clearly indicates that the demand is back with a bang. Any good property closer to position, there's hardly any inventory left. So very clearly, it's a very, very, very sectoral, big secular tailwind that the sector is seeing. But we are trying to play this sector more through building materials because, we're not comfortable with a lot of the names on the real estate space on the developer side. And secondly, we don't really understand how to value these companies because, the PNL doesn't reflect the true reality. So we are actually playing this sector via building materials and through some of the home financiers.
Right, okay, that's the take coming in on the realty pack. Right now, it's banks which are on their way to recovery. ITC is holding out very smartly, a good 1% move coming in here. What is it that you made of the entire demerger news?
So I think, this was very much on the cards, but the kind of the kind of demerger Street was expecting, I think the actual print has been a bit different. But very clearly, I think the management has shown a clear intent that they want to create value for investors. And very clearly, I think that's been the stated stance for last 2 years that they will demerge the company once they think that those demerged company can stand on its own. So I would not be surprised that we'll see 1 or 2 more companies getting demerged out of this ITC conglomerate in the next 1 or 2 years. And in that kind of a scenario, I would continue to believe that, ITC as a stock should do well. It is relatively, despite all the outperformance it has seen in last 1.5 years, it is still by far one of the cheapest FMCG companies and obviously a large cap name. So it looks pretty interesting to us, honestly.
Since we are talking about consumption, let's look at some of the QSR names as well. Westlife, of course, yesterday was seeing a bit of a sell-off on account of that 7% SSSG, but the management is confident about bringing back growth, and that's the reason today that stock is holding up around 4%. In fact, a lot of interest around some of these QSR names when it comes to dealing rooms as well, and there has been some fresh buying that we have witnessed. Let's go across to Sharad to try and understand which is that stock from the QSR space that the dealing rooms are talking about.
Well, yes, in focus we are having Restaurant Brands Asia, and what we are hearing from the dealers is a strong buying coming in from the DI segment. Now the DIs have already invested in the company earlier. As per the shareholding pattern, includes the name of Nippon India Mutual Fund as well as Aditya Birla Sun Life Mutual Fund. The stock is trading up with its key daily moving average of 50, 100, 200 DMA and is up almost 34% from the March lows. But there are, of course, some signals coming in from the street. They're expecting there's an increase in the urban discretionary expenditure, and that will actually drive up the sales as what we had seen in the Q1 numbers for the Westlife development. And for FY24, the management expects that the same store sales growth is expected to come in at roughly 10%, while the gross margins, they're expected to come in at almost 67%. Now, apart from this, the Popeyes business is also getting a strong response coming in. The volume numbers, that is expected to go up going ahead. And also the Indonesia business, they are expected to get their break even on the cash levels in FY24. And of course, in a recent interview with ET Now, Ace investor Porinju Veliath also stated that this stock would be his top pick for the next 5 years.
Okay, Sharad, we'll leave it at that. In fact, let's get in some BTST trades as well before we wind up for the day. Kunal, what's on your list?
So, 2 buy calls. The first one is on IRCTC. After quite some time, the stock has made a very mild comeback, but this could be a sign of a strong turnaround for IRCTC. Buy with a target of 660, stop loss at 610. And the second would be a buy on Union Bank from the PSU banking lot, now trading just closer to that 1991 mark. Again, a breakout on a minor time frame for Union Bank, which suggests a buy with a target of 3-digit 100 and stop loss at 87.
Right, What about your top strategies, BTST?
So first would be a buy on Apollo Hospitals with a revised stop loss at 5,300 and a target price of 5,450. Second would be a buy on UBL, United Breweries Limited, a range breakout here. And the stock has seen good volumes over the last 1 month as well. Stop loss at 1540, target price of 1620.
That's a take coming in. Let's take stock of what's happening in terms of the specific movers. And today, of course, Intellect Design, after our interaction with the management, has picked up more gains. So it's now locked in upper circuit, 20% higher, had already opened with quite a bit of momentum. And then Godfrey Phillips, I think it's the second day running that stock has been high for around 10%. Naresh, your take on the charts of these two names, despite the run-up, would you look at buying any of these names or book profits?
So would be riding onto both the names rather than booking profits because the move has been almost very large and volumes have been too large. It's a 5x, 10x volume bump up. So one can ride on, keep a trailing stop loss. But after a 20-30% move in 2 sessions, it's tough to take a buy with a small stop loss. So the viewers trail onto the position and maybe book over the next 2 to 4 sessions.
Okay, that's the take coming in on some of the interesting buzzers in trade right now. Tata Chemicals, that's the one which just shot up a good 7%. There's Indiabulls Housing as well, a good 6.5% move coming in there. Tata Power, again a move in excess of 6%. Z's holding up over 4%. LIC Housing Finance as well is seeing quite the buzz in trade right now. Naresh, just on the charts of Indiabulls Housing actually.
So the stock generally remains in the derivative band, so that's where it becomes a problem. Sees volumes on the first day of the expiry, but the volumes in the last 3 days have been good. So out here it could surprise on the upside. Any fade off towards 130 due to the derivative band should be an entry price. Stop loss below 125 could go towards 160 to 180 also.
Separately, Pawan, what's your take regarding some of these pharma companies? They've reported stellar set of numbers. Do you think it's ripe for a re-rating after Cipla, Dr. Reddy's, Syngene, etc.?
Again, in pharma, you need to be very, very, very selective because, I mean, take the case in point of Cipla and Reddy's. A substantial part of their US sales was boosted by Revlimid, one single molecule that could continue for a couple of more quarters. But that may not be the case for the long run. So for the long run, you'll have to look at the product profile of individual companies. We think, some of the leading companies in this in the pharma space, without naming them, some of them are doing some wonderful job in terms of specialty generics, in terms of building very strong franchise on the injectable side. That is where, we place our bets. But largely, we are still, I think, underweight on pharma sector. And until there is very high clarity on the pricing scenario on the US side, we wouldn't want to take an overweight position on the sector.
Okay, great to have you all on board with us today. We let you go on that note. See you again with trading action Monday morning. But let's begin winding up for the day. We're closing indefinitely off from the session lows. Made an attempt to climb back into the green, closing in just 22 points lower. So back at that 19,600 range for us. Sectorally, what's done well? Power, infrastructure, media, textile, cap goods. And losing edge, there's been technology, banking, oil and gas, which have been a bit on the sidelines today. Let's mark the losers. HDFC Bank just had a sizable block deal. I think 1.5% of equity changed hands. That stock is going lower by about 2%. Bajaj Finance, Axis Bank. So a couple of these, large heavyweights are the ones which have dragged us lower. IndusInd Bank, Infosys, Tata Motors, Maruti out of its numbers next week. L&T, SBI have all been ranked underperformers. On the flip side, of course, it was energy all the way. So NTPC, Power Grid have held out well. Infrastructure names like Adani Enterprises, ports have done well. M&M made a solid comeback after that 7% loss that it had in trade yesterday. So that stock held out well. And yes, pharmaceutical continues to be the flavor of the week. So DRL today made an uptick of about 1.25%. And Cipla as well. After that big move yesterday, today too it's managed to put on about 0.6% of weight, 0.5% in the spot markets. Tata Chem, Tata Power, Indiabulls Housing, LIC Housing Finance, these have been some of the other big movers in trade. It's important to even mention the underperformers from within the broader end of the market. Before that, I must allude to the market breadth, which managed to close in favor of the advances. But nonetheless, the losers did include the likes of Lalpat Labs, which was down about 4.5%. We were just talking about IOC's earnings. That stock fell about 3.5%, but so did HPCL. That too has closed in lower by about nearly 4% or so. But that's it. We're done for the week. We're closing in absolutely flat, just about defending that 19,600 mark, which we did come pretty close to even reaching today. But we'll wind it up on this edition of Closing Trades.